Today we're looking at a new cryptocurrency. Well, new to us anyway. I'm wanting to add some more cryptos to my watch list, so help me out. What cryptos do you guys like to trade? Let me know in the comments below. Hi, this is Tim from TradingStrategyGuides.com. I've added a few new cryptos to my watch list, and I've got a setup on one of the new ones, Ethereum Classic. Plus, I'll catch you up on all the open trades, and we're going to look at Trading Maxim Classic too. Stay with me. Remember, you can speed this video up by clicking the gear icon in the lower right of the video and selecting a new speed. Let's take a look at the open trades. Apparently, we're not through our drawdown just yet. Amazon closed back inside the triangle right here, so I'm out at 1786.40 for about half of our full stop. Done with Amazon for right now. Same with the E-mini Russell 2000 index. The Russell closed back inside right here, so I closed it Wednesday at 1473.30 for about 2/5 of the full stop. As you can see, it went on up and hit our full stop today right here. That's how we keep our losses small. And on a more positive note, the Dish setup I showed you Wednesday triggered Wednesday right there. I bought Dish at 33.44, my stop at 31.73, and my first target at 34.58. I went half size on this because there was only 85% volume right there. As a reminder, if we get a close back inside this range, I'll take the loss right then. And when this thing hits the first target, which it came close to yesterday, I'll take half of the position off for profit and set the remainder at break even. Just a reminder to watch Bitcoin over the weekend. As you know, the cryptos continue to trade all weekend. It seems serious about breaking this support level on our descending triangle, and it may do it over the weekend. Remember to make sure you've got at least average volume for a full-size position, or at least 75% of the volume for a half-size position. Crude oil has broken through the top of our descending triangle right here. We talked about this a couple of weeks ago. Normally I would say that this pattern is busted and I'd be done with it, but I experimentally redrew the downtrend line right up here, as you can see. And I sort of like the idea that this triangle may now look a little bit longer. This triangle looked a little foreshortened to me. So I'm going to watch this and see if it sticks to this new downtrend. If not, I'll be done with it. So I'm calling this pattern still active right now, and I'll redraw it that way, and let's see what happens. Let's take a look at Ethereum Classic now. Some of you guys that have been around here a while probably already know that I'm a software engineer by trade. I don't do it much anymore because I don't want to think that hard anymore. But I spent my life doing it because I loved it. You know what they say? Let's see, what is it they say? Do what you love and you'll never work a day in your life. That's what they say. Also, I come from a family of all sorts of engineers, so engineering is in my blood too. Consequently, I love following engineering breakthroughs of all types, but especially software engineering. And of course, that's what cryptocurrencies are based on, right? So I just can't help myself. I also like to understand the basis of the markets that I trade, so I end up doing quite a bit of research on these markets, and I typically share a synopsis of that research with you guys. This time I'm not going to bore you with all the exciting, nerdy, geeky stuff about Ethereum Classic. If you find that stuff interesting, I'm sure you'll also enjoy the research yourself, and I'll link this wiki page below for you to check out. Just know that Ethereum Classic is related to Ethereum and is a blockchain-based crypto with the symbol of ETC. Here's a daily chart of Ethereum Classic US dollar from one of my brokers, Binance. It's set up with a nice trading range between 520 and 750. The volatility has been declining right here. It's popped just a little bit right in here, but it's back in its decline. And also the volume has been in a decline with a similar pop right here in the middle and a continuation of the decline. The only thing that kind of hiccuped here is this trader excitement on this big move right here. Otherwise, it seems to still be in decline here. And I like that because, you know, trader boredom and all that kind of thing. So here's the plan. We will buy a daily close above the range or above 750, or we will sell a close below the range or below 520. On the breaking candle, to enter a full-size position, I want to see this volume bar right here reach up to the volume average. If it doesn't quite reach that average, but does at least reach 75% of the average volume, I will take a half-size position to reduce risk. You can calculate the percentage by taking this volume number right here and dividing it by this volume average right here. You need to get at least 0.75 or 75% to trade half your position size. The stop loss will be 1.5 times the average true range or ATR right here, and your first target will be 1 times the average true range. So on your breaking candle, look at your ATR right here, multiply it by 1.5, put your stop loss behind the trade by that amount, multiply it by 1, and put that ahead of your trade as your target. If after entering the trade we get a candle that closes back inside the range, back above 520 on a sell, or back below 750 on a buy, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout from these patterns should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When price hits our first target, we plan to close half the position for profit and set the stop loss to break even on the remainder. We will then follow the stops as price moves in our direction until the market takes us out. Now typically I do this by using 2 positions. The first position has a hard stop loss and a hard take profit at the appropriate prices. The second position will have a hard stop loss and no take profit directly associated with it. And that's our setup on Ethereum Classic today. Remember guys, I'm not trying to tell you what to do. That's not my intent, these trades. I'm just telling you how I handle these trades. If you want more details about what I do, look below this video for a link to my trade management video. And if you've developed your own trade management plan that works good for you, by all means use it. Trading is a very personal thing. Things that work for me may not work for you. You have to understand your personal psychology to find the best strategies for your trading. And I know I've shared this before, but I'm going to share it again for any of you who may be new. My personal style of trading is I have trouble focusing on charts for long periods of time. As a child, I thought it would be cool to train my brain to move on to the next thing as soon as something gets a little bit slow. I thought I was learning to multitask. But it had a detrimental effect on me, and it keeps me from being able to focus for long periods of time when something is not happening. And that's the way trading is sometimes. You have to continue to focus on the charts even when nothing is going on. Otherwise, you're going to miss something going on. So my brain moves on, and I'm likely, you know, if I've got to sit there and watch the chart for more than 30 seconds, I'm likely watching cat videos or something else when the move happens, and then I totally miss the move altogether. I used to follow a trader who was my mentor and was amazing at following 1-minute charts, and he could do it for 18 hours a day and make huge amounts of money. And I tried to do that, and I just lost money, and the reason was because I kept missing the moves or getting in too late because I was, you know, looking at email or reading the latest gossip column or something, you know, something stupid. And I would totally miss the trade, or I would jump in too late, or I would miss the exit, or jump out too late, or do some other stupid thing. And it just wasn't working for me at all. So I had to develop my own strategies that I was able to follow without a problem. And that's the reason why I do daily charts only. I only have to focus on charts for a few minutes. I don't have to watch them when they're not doing anything. That's what I mean when I talk about understanding your own personal psychology. And there's that great segue again. I just keep doing that, don't I? Speaking of psychology, part of my psychology is the trading maxim, and we're going to take a look at today's trading maxim. A maxim is a general truth, a fundamental principle, a rule of conduct, or a proverbial saying. These maxims I've got come from various sources, books, the internet, friends, coaches, teachers, others. The purpose of my maxims is to motivate me to discipline, not only discipline in trading, but discipline in other areas of my life, like fitness, which has been a huge issue for me for the last 20 years. But I think you guys will be hearing more about that in the future. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life, just to make sure that you always do the right thing. Feel free to borrow from my list. Today, like I said, Trading Maxim Classic in honor of Ethereum Classic. Tim's Trading Maxim number 10. Don't worry if you leave money on the table, it's not worth the ulcers. See, it's not real profound, so you can tell that I wrote it, right? How many of you have heard the old saying, don't cry over spilled milk? Why do people say that? What does that even mean? Well, obviously it means what's done is done. You can't unspill the milk, right? Once you've closed a trade, you can't unclose it. So why worry about it? The only reason I watch a market after I've closed a trade is to see if I have a reason to change my rule set. When I close a trade early because it went back up into the consolidation, I track to see what happened to it after that. I've done it for a long time, and a significant portion of my trades eventually end up hitting the full stop. Hence my rule to close the trade when I get a candle close back inside the consolidation pattern. But I don't worry about what happens after I close the trade, because that's just worthless stress, because there's absolutely nothing I can do about it. I don't re-enter the trade because it is no longer a high probability setup, and I only like high probability setups. I'll bet you've been told since you started trading that you should take high probability setups, but nobody ever bothered to tell you what a high probability setup was. Well, that's the sort of thing I'm talking about. Yes, if a candle closes back inside the range, it could turn around and go in your direction like gangbusters and make a whole bunch of money. But it's no longer a high probability setup because the momentum of exiting that consolidation is gone. It closed back inside the consolidation, so the momentum is gone. It may develop new momentum coming out of that pattern, but I like to look for brand new patterns at that point, because I don't believe it is any longer a high probability setup. So anyway, back on track here. I believe in stress-free trading. If you question every single rule in every single trade, I would say that's not very stress-free. Learn to let it go and walk away from it. I believe that has application when dealing with people too, doesn't it? Remember our Ethereum Classic trade plan here. We're going to buy a daily close above the range around 750, or sell a daily close below the range around 520. If the volume is not quite average, go half size, as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to check out the trade management video for more details. The link will be below. And sign up for my free Trading Picks email list, just to be sure you don't miss any of these trading picks. I'll be sending out about 3 or 4 trading picks a week, everything from stocks to futures to cryptos to Forex, and you'll get to see them first. Plus, you'll get first notifications of anything special that's happening. And the best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday and Friday for my analysis videos just like this one. And Wednesday morning for training videos, which will most likely include a trade setup too. Thanks again for all the input on subjects to discuss in my Wednesday videos. Another week of pattern recognition, and I'll get to the other subjects. Don't forget to comment below about which cryptocurrencies you'd like to see me add to the watch list. Oh, and by the way, I'm testing a new strategy to add to our toolbox as well. I'll talk more about that in the upcoming weeks. I also want to mention that I'm going to be out of town for a few days in mid-September for my nephew's wedding. Someone at Trading Strategy Guides will be filling in for me on a video or two, so that should be fun. It might actually even be Casey's daughter, Courtney. I'm looking forward to that, Courtney. Follow me on Twitter. Sometimes I post things there. I'll put my Twitter link below. Tell your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching. Thanks for subscribing. And don't forget to hit the thumbs up below. And also don't forget to hit the bell so you get notification when a new video comes out. Have a great weekend, and I'll see you next week.